Hi, I'm Chris from StockSpot, and in this video, I'm going to be talking about how the ultra wealthy invest and how you can invest like the ultra wealthy. Now, this is all based on some research that's recently been published by Frank Knight, which has looked at how really wealthy people invest in different countries. And the first interesting part of this research, I thought, was what does it take to get in the top 1% of wealth in the country? And it's actually quite different in different countries. Australia is the seventh hardest country to make it into the top 1%, and you need about 7 million Australian dollars or 4.6 million US dollars in order to make it into the top 1%. So that's what it takes to make it into the top echelon. But what about the ultra wealthy? So this Frank Knight research defines the ultra wealthy as people with over 30 million US dollars. So the super rich. And it looks into where they've invested their assets. And what I thought was interesting was that, first of all, around 46% of their wealth is invested into property. Both residential property, their own home and potentially some holiday homes, as well as commercial property. So that's a big chunk of their wealth. The next segment that fits in is shares, about 18%, government bonds at 12%, and then a range of smaller investments including gold, venture capital, cryptocurrency, and investments of passion. And investments of passion include things like watches and wine and cars and other fancy things that very wealthy people invest into. So how can you replicate this sort of strategy or invest in a similar way? Well, luckily these days, it's quite easy to replicate a lot of these underlying asset classes that the ultra wealthy invest into using ETFs. So as a starting point, the residential property a lot of Australians already have. You often own your own home already, and some people are fortunate enough to own 2 or 3 homes. So the property aspect is usually covered. Then you want to find a share market ETF, a government bond ETF, a gold ETF, and then potentially some other ETFs to replicate some of the other parts, like a REIT or property ETF, and a venture type in ETF, which doesn't exist on its own, but probably a NASDAQ or technology ETF is probably the most similar to that. So within the StockSpot portfolio range, what would it look like? Well, I've had a look at our portfolios, and probably the most close representation of this ultra wealthy portfolio would be our Emerald portfolio, which has a range of different assets in there, including shares and bonds. But then you would be adding themes to this portfolio and either adding 2 property themes, both the Australian and global property theme, or one of those property themes and the NASDAQ theme for the extra tech exposure, which is a bit of a proxy for venture capital. And I think if you invested in that way, you'd actually have quite a similar underlying asset exposure to the ultra wealthy. It's not perfect. It doesn't include watches and wine and cars. It's very hard to get exposure to those without directly buying them. But you'd have an overall similar portfolio, and over the long run, I think earn pretty similar returns to the ultra wealthy. And that's how you can invest like the ultra wealthy.